this is Jordan here at Pure Elliott Wave, and I wanted to do an update with you for our recent Euro US dollar calls because our invalidation was actually struck and we shifted to the alternate count. So I want to show you how that played out over the past month. We'll be starting this count on the 22nd of June. Our last update on YouTube was on the 14th of June in this upward trend. And it's important to note that wrong Elliott wave analysis would be analysis that breaks Elliott wave rules, or it only has one wave count that is invalidated, leaving a trader with no alternative pathway. So I'm going to show you what our alternative pathways were moving forward and how I actually profited off of these. And I'm currently up some in my current trade as well. So I'll show you what my current trades were and how I managed them with Elliott wave. So let's get into it. This was our main count on the 22nd of June. This is actually expecting bearish movement, as you can tell by the arrow, with this upward move most likely completing very soon based on the internal structure of this zigzag for minute wave 2. The invalidation is close above, which is where within this motive structure to the downside, wave 2 would move beyond the start of wave 1. And if that level was breached, we would shift to our alternate. The larger structure we're looking at now is an A, B, C flat, which had A off down here, B coming up, and now C moving downwards. So we're expecting a short-term bear market in a very long-term bull market. So both counts were bullish for the longer term, but the short term they differed. I'll show you the alternate right here. And this is the alternate. We could see a 1 and a 2 going up into a third wave upwards. So this is a very bullish count. And the invalidation on the bearish count, which I just showed you, was up here. So if price broke that, we'd likely see some more upwards movement. Important to note that this count as well was expecting a pullback. We were waiting for the top of either the third wave, which would pull back down, or the top of this third wave here, which would also pull back down to this area, because the fourth wave usually finds rest, the fourth wave of the preceding wave, or if 1, 2, 3, 4, 3, 4 was complete here, we'd also find another pullback that would not move beyond the top of minuet wave 1 here. On July 6th, you can see price has slowly drifted down and has been sideways since the top, and that is not a very good look for a third wave structure, as we're looking for 1, 2, and a third wave down. This would also be the third of a third right here, where we had 1, 2, 1, 2, and we failed to break down. We actually made a slight new low on this candlestick below this candlestick here. We had a strong channel and an invalidation just above, a little closer at 1.10109. That is where the minuet 2 moves beyond the start of 1 here. This base channel also was very strong, and I'll show you our hourly chart and what I commented below regarding this base channel and some shorter term invalidations. So price overall not working the way we would expect to see for a third wave down, and this caused some concern with all of the overlapping between these waves. I also had the alternate daily chart here, which expected a little bit more downward movement and then a bullish outlook. We also had another alternate count on the hourly, which saw all of this overlapping as another structure. And I mentioned in the comments, the first hourly chart remains largely the same as yesterday, with another series of 1 and 2 waves complete at the submicro degree. And the invalidation point above is very close by. If this invalidation is broken by even 1 pip, then this would also violate the base channel, and we would defer to the second hourly chart below. The second hourly chart looked like it actually saw a 1, 2, 3, 4, 5 complete to the downside, and then if we broke that best fit channel and invalidation, it would likely have explosive upward movement for the short term, and that is exactly what happened. We broke this invalidation at the short-term level, we broke the channel, and then we also broke the longer-term invalidation above. So if you were trading this to the short side, you would have had a short-term stop and a near-term stop. And when this channel was actually broken and the invalidation was hit, I actually did long the market at this point. This is our main chart from the 10th of July, just a few weeks ago, and you can see from that channel being broken, we had some larger upward movement, and we are just sitting below the invalidation point for the short term and below the invalidation for the larger bearish count. That invalidation would also break the best fit channel above, and then the bearish count would see the best fit channel below. So we're either expecting a third wave to the downside or a third wave to the upside. Either one would be very strong, and I mentioned that in our analysis. Whatever way the market breaks would likely be strong. What followed over the next few days was some very, very strong candlesticks, probably the strongest we had seen in months. And the last two charts I have to show you here are from the 18th of July, just a few days ago, and you can see these giant green candlesticks for a third wave upwards, and then some indecision candlesticks at the top here, which had us label this movement complete and expecting a downward move. So now the alternate is our main wave count. We've shifted that, but we're also keeping the bearish wave count in our back pocket. I'll show you that right here. The bearish wave count, which is expecting the B wave to continue higher and then the C wave to move downwards. And since the top here, we've actually had a downward trend. I made profit on the way up here. And also I shorted here with the indecision candle on the third day with the longer upper wick, and I was able to take some profits to the downside just recently as well. You can see now that we have shifted our invalidations. The bearish wave count has an invalidation above at 1.15483, which is where the B wave would be over 2 times the length of the A wave, which has a lower probability. And back to the main count, that invalidation for a shorter term bull count is below 1.10109, and then we have another invalidation on the weekly count that would invalidate both bullish options, and that is below the bottom of minute wave 2 right here. And when I'm trading the markets here, I try to keep my risk as low as possible. When I traded on this candlestick, I was able to risk off the top. Always assume that you'll be wrong. Always assume that you could lose money on a trade. So try to keep those risks as low as possible. For instance, when I long the market here on this strong channel breach, I was able to risk off the bottom of this candlestick and enter here, and you could see the risk to reward ratio here, if you had a good profit taking strategy, would be huge. Finally, the biggest point is that when we switch from a main count to an alternate, the nature of Elliott wave is its rules are absolute. This means we know exactly at what price point to pivot, to close a losing trade, contain losses, consider opening a new trade, and pivot to the direction of the new wave count. So it's important to check our analysis every day if you do have positions open in the market or if you're content with your risk level. So this has been a little bit of a review for our Euro analysis over the past 2 months, and thankfully I've been able to call every large trend as it's happening and been able to profit off of that. So I hope this has helped you guys and given you a little guidance on how to use our analysis, how to trade a little better, maybe not try to trade these little wiggles in a move. So use those key levels, keep your risks low, and never assume our analysis will be 100% accurate. However, with our analysis, you're able to capture a lot of these trends based on the probabilities. But that is all from me, Jordan at Pure Elliott Wave. Hope to see you guys soon. Until next time, bye.